Okay, welcome to the Friday, June 23rd wrap up and portfolio trade reviews for the day. Let's take a quick look at the markets. We closed SPY, closed up $3.30 lower today. We're moving into this former resistance area here. May come down, it might turn into support somewhere right around here. You've also got the fib level right around 428 as well, the old 618 that we had broken through a bit. So it might come down, might find some support and curl there, but MACD is dropping, TTM squeeze dropping, stochastic momentum is dropping. We probably have some more down days to go, or at least some definite sideways action for a bit before maybe we resume the uptrend rally. Even on the weekly here, you're seeing a little bit of a crack on the MACD and the stochastic momentum turning over. Doesn't mean it's all over with, but a little bit of weakness there, but we're still firing a long squeeze on SPY. On the QQQ, pretty similar. We had this old resistance area here. We broke through it. We're coming down, potentially looking to retest this zone. This is also the 21 EMA here. So that could be an area of some support. However, again, MACD breaking lower, squeeze moving lower, stochastic momentum moving lower. All your momentum is coming out of the QQQ, at least for the time being. Let's see if that can recover. On the weekly over here, you got MACD with its first dark block here in the last 6 sessions. Even though squeeze continues to fire, this thing is still way overbought on the Q, so expect some more weakness in technology. I don't know if we'll hold here or not, but at least for the time being, a little weakness. And then on the IWM here, we came up to the same resistance zone, but the IWM didn't break it like the Qs or SPY did. It rolled over right off of that previous area, moving down. Now, it did bounce off the 50% fib of this up move here today, so we'll see what happens. That was the low of the session. It didn't close a whole lot higher, but it did close off of that. But if you look at the internals, RSI, MACD, squeeze, together, all heading lower. And even though there's some decent upward momentum here on the weekly, it could be in for a little bit more sideways move. It just keeps moving sideways here. So that's what the markets look like. Let's take a look at our account and how that traded. So today on the 13th, we ended the day 213 positive delta. It's the first time we've been really positive in 2 weeks, but positive to that extent, really because the market's falling. A lot of our positions are just naturally starting to move into a little bit more of that positive delta range. It's all good to be expected. We are still well within our parameters here on delta. Theta 817, we did close a few trades today. We're going to get into those trades. So Theta dropped a bit on the day, not terrible, but still around that 0.3%. I'd like it a little bit higher, but 0.3 seems to be our sweet spot. So 0.3% is really Theta-wise where we want to be. Netlick bumped up again today. So we've continued to move up a tad, at least added almost $9,000 on the week since last Friday in our net lick. BP usage dropped a tad, still hanging around 64%, which is high. We're going to keep an eye on that. We'll let a few things fall off next week before we add anything new. And we did close $752 worth of realized gains today, bringing us to $1,100 on the week, $1,140, and bringing us to $2,250 in realized gains for the month. We're sitting there right around almost 1%, 0.8% for the month. We still got a bunch of things coming due next week, should give us some good returns. Our biggest problem for the month is we just had so many hedges back here coming off. That's really hurt our income for the month, but gave us a lot of safety. And if we look at today's trades, 3 trades down in here, for today that all closed today. First one we'll touch base on is our covered call in Amazon on our synthetic stock position. We opened that back on the 16th, last Friday, for 64 cents. I closed it a little earlier today at 2 cents as opposed to letting it expire. It's okay to do that in Tasty Works, but I closed it just in case we had any kind of a late day rally. It was close anyway. I think Amazon closed around 129.33. So it did close, but at one point it was 130.50 or so. We ended up taking out $186 out of that trade in 7 days. We're 97% winner, 3% return on the margin used. We also had in our NVDA strangle closed today as well at the 50% mark. We put this on back on June 5th. We took in $4.06 for that trade, closed it today for $2.03 automatically, took out our 50% winner, $200 on that trade, 5.2% return on margin in just 18 days. Beautiful trade. And then lastly here, we had a strangle close today. So one of our strangles did close. This is a strangle we had in ES. Now, this is one of our weekly strangles that we put on. What we decided to do a week ago was actually not take one off, as I felt we were overbought, and our strangles were, not tested necessarily, but they were showing a little bit of a loss. I thought I would hold it an extra week or so to see what would happen in the market. So I added our normal one in the rotation, so it left me with 5 on. So I did take the 5th off today, so we're back to 4. So we have our weekly strangles working, and so that ES strangle, it ended up taking us 37 days in the trade, made $363. It was a 30%, 29% return on that from a premium capture standpoint, and a 10.9% gain on the margin in that particular trade. So we're all set, ready to go on these for next week. Portfolio looks good. We had a great portfolio review today. If you haven't watched that video, go ahead and watch it in the YouTube channel. If you like these videos, go ahead and please click that like button. If you would, go ahead and subscribe. We'd love to hear from you in the comments of any kind of videos you'd like to see or any questions you might have. So give us a like, go ahead and subscribe. We'll see you guys next week. Enjoy a great weekend. Take care, everybody.